Hi guys, Zikin here. I'm a year 4 computer science student, and I'm revising for my BU5101 accounting module. And I thought it would be fun to record a video series of my solutions for the different seminars. So if you found that this video was helpful to you, you can check out my GitHub page where I have other repositories where I detail some of my solutions for the other computer science modules as well. So let's get started. And we are faced with the first question. So in this tutorial, there will be two questions. And for this question, we are told to label the different line items in I believe it's the balance sheet with it indicating whether it's an asset liability or a stockholder equity. And if it's a stockholder equity, if it's a revenue or expense. And the first one has been done for us. So accounts payable is a liability. And we know that because you will be liable to pay for an account that you bought on credit, and hence a liability. For the second one, we have the marketable securities. So marketable securities are something in which a company would purchase to invest in a short-term investment. And we know that this would classify as an asset. Next for common stock. So common stock will be under the shareholders' equity by definition itself. So I don't think there is much to explain here. So along with common stock, there would be retained earnings that fall under the shareholder equity. So next one for the cost of revenue. So the cost of revenue would also be termed as cost of goods sold, so COGS. And the COGS is an expense. So for BE. For number five, the deferred contract acquisition costs. So the first time in which I was doing this tutorial, I got this question wrong as well. And what a DAC is it allows the company to actually defer the cost of sales associated with acquiring new customers. And by deferring this cost, it becomes an asset for this company. So we would classify five as an asset. And after you defer this cost and recognizing it as an asset, you now need to amortize this cost to match your income. So the reason why we even have this DAC is to prevent extreme income fluctuations because the cost of acquisition of a customer can be very high. And you want to match that cost to reflect your income as accurately as possible. So to match that cost, we then amortize by siphoning part of the value of that asset to match it with the revenue for that period. And this is why the amortization would be an expense for the line item five. Next, we have cash and cash equivalents. So, by definition, cash is an asset, and cash equivalents are just your marketable securities or your short-term trading securities. So that would be an asset. Next, we have strategic investments. So I would presume that strategic investment here would mean the long-term investments. So long-term investments, such as say items in your FVOCI, which would be covered in later seminar and tutorials. So these are actually long-term investments, and long-term investments will fall under your asset. And so we're done with the part 1 to 8 for question 1. So we move on to question 2. So for question 2, we are told to calculate the total asset and total amount of equity given some information about the company. So we can take a look at question 1 first. And in question 1, we are told some information about its liability, equity. So what we need to do is we need to break down this information and use the accounting equation to solve for this question. So I will start by solving assets equal to liabilities plus owner's equity. So based on this equation, if we have the liability and equity, liability is 76K and the owner's equity is, sorry, 56K. Then we will have our asset to be the sum of both, 132K. And what we are told is that ABC company has purchased a solar panel for 26,000. And for the panels, this will be the breakdown, right, of cash and the notes payable. And we can form the journal entry for this transaction. So when you purchase an asset, you would debit the solar panel, which I presume would be an equipment, and you would debit it as 26,000, and you have to credit the corresponding entries. So because there's a cash paid out to decrease an asset, you need to credit an asset. So that would be 12K. So this is an asset, and this is an asset as well. Right, and you promise to pay the remaining 14K. So the 14K will be a liability. So we know that it's a note payable and it's a liability. So to decrease a liability, you have to credit the liability to increase it. And it's 14K. So it's perfectly balances out. And now we need to find the total asset. So to find the total asset, what we want to have is the ending asset equal to the starting asset plus the change in asset. Right. And we know that these two items here are the change in asset, and this here is the change in liability. Okay, so to solve for this equation, we have the starting asset. So the ending asset is equal to the starting asset of 132,000 plus the change. So you have to note that 26 is an increase to the asset and 12,000 is the decrease in the asset. So the change in asset would be this. And you should get a final value of 146,000. So I think this is very straightforward. And let me provide you an alternative view to solve this question from the equation. We have asset equal to liability plus owner's equity. And given that there is no change in owner's equity, as we've seen from the question, right? Then the increase in asset must be equal to the increase in the liability. And we know that the increase in liability is 14,000. Thus, the increase in asset must be 14,000. And if we solve for the ending asset equal to the asset plus the increase in asset here, we will get 132,000 plus the 14,000 and get 146,000. So we can see that the two final values are the same. And yeah, I mean, that's how you can solve the question alternatively with the, the accounting equation. So I hope that's something very interesting for you to take away from this video. If the first 10 minutes was just me blabbering. So yeah, let's go to question two. Um, and we are given the asset liability, and we're told that the company is fined. So over here, I would take the fine as a legal expense. So we have to expense that off, and we are told that it's paid in cash, right, immediately. So cash will be reduced. And after the fine is paid, we want to find out the total amount of equity. So similarly, I would solve with the accounting equation. And given that the asset here is 116 and the liability is 46, we solve for owner's equity to be 70. And now we form the journal entry. So we debit the expense, the legal expense, which I will just abbreviate as the expense. So we have the debit and credit, so 23,000, and then we paid in cash, right? So an expense is an owner's equity item. To decrease the owner's equity item, we are supposed to credit, but because an expense by nature decreases owner's equity, so we debit it instead, right? We have cash that was paid. To decrease cash, we credit because cash is an asset. We credit by 23,000. So equation balances out again. And we solve for the ending balance of the owner's equity. So it's start owner's equity plus the change in owner's equity, right? And we know that this is the change in owner's equity. This is the change in asset. And similarly, you can substitute the values. Sorry, this is plus, this is minus, because there's a decrease in owner's equity. Solving for it, we will get 47,000. So you have to be sure of the sign that you're using because the expense decreases and owner's equity by nature. And similarly, you can also solve with the other side of the equation. So asset equal to liability plus owner's equity. Okay, given no change in liability, then we know that the decrease in asset equal to the decrease in owner's equity. And there was a decrease of 23,000 in asset. So by nature, there will be a decrease in owner's equity. Sorry, owner's equity of 23,000. Right. So I mean, this is even clearer because it's very easy to see the asset has decreased. So to solve again, we will substitute the starting owner's equity and the change in owner's equity, which is a decrease in 23,000. So you should get the same value of $47,000. Right. And moving on to the final question, we are told that the SDA assets and liabilities, and in this question, we are told that the owner invests in two things, right? So the owner invested 11,000 in cash and 15,000 in equipment. So there's two components to this investment, and you might be tempted to just add cash to the asset and then assume that you paid to the equipment with cash. But over here, the question said that the owner actually invested in both. So uh, the company did not use cash to buy this equipment. And if you were to go online, you can see that as the owner, you can indeed invest in other assets into the company as well. So both of these would increase the asset, and the crediting side will then be the paid in capital. So um, to actually write this out in concrete plus equity, and we are given asset equal to 6 and liability is equal to 6. To get the owner's equity, we will use asset minus liability, and we get 20,000. So let's try to form the journal entry. There's an increase in cash, right? So we debit cash, which is an asset. So we increase cash by 11,000. And there is an increase in the long-term asset, right? Property and equipment. So we increase it by 15,000. Okay. And now, there's a crediting side, right? That we have to balance the equation out. And we have to credit paid in capital, which is the amount of capital contributed by the owner. And this itself is an owner's equity item. So to increase the owner's equity item, we have to credit, and that's by definition. And we credit the 26,000, the total amount that was paid in by the owner. And with this, we can now solve for I believe we are supposed to solve for owner's equity. Let me just check. Yeah. So similarly, the ending owner's equity is equal to the start owner's equity plus the change in owner's equity. So over here, we have the change in owner's equity. Here we have the change in asset. So 20K. And remember, this is an increase, so you have to add this value and you will get 6,000. And similarly, if you want to take the viewpoint of the asset, and we know that the liability, change in liability is equal to zero, then we can say that the increase in asset must equal to the increase in the owner's equity, right? So if the increase in asset is 11 plus 15, which is 26,000, right? Then the increase in owner's equity must be the same. And we can solve for the equation for owner's equity, which would give you the same value as 46,000. So that would be my solutions for this tutorial one. Again, these questions are not set by myself. These are from NTU. I do not claim credit for these questions. And if you do find any mistakes in my video, just let me know in the comments, or you can always message me so that I can correct the video. I hope this video was helpful for you. And I will be looking forward to doing the seminar too. Thank you very much.